Well, ladies and gentlemen, the pieces are finally coming together in what we're calling the housing market bubble. And today, another zinger finally hit us. So basically, right now, applications for mortgages to purchase a home dropped 12% from the prior week and are down 15% from a year ago. In its reports, the Mortgage Bankers Association today added that the prospective homebuyers have been put off by higher rates and worsening affordability conditions. So how did we get here, and what exactly does it mean for all of us? If you're brand new to my channel, my name is Austin Zabak. I'm a real estate investor, a real estate agent, and I'm a homeowner, probably just like you. So by the end of the video, hopefully we all have a little bit better of an understanding of what in the heck is going on in the housing market. If you're brand new to my channel, like and subscribe, and let's go ahead and jump right into it. So I want to start off by saying that home flippers actually contributed to the housing bubble that we're currently in. Now, a home flipper is somebody who goes ahead and they actually buy a house, they renovate a house, and then they resell the house. Usually the rise of home flippers actually contribute to the rise of the demand in any housing market, therefore contributing to the rise of housing prices. And surging prices are obviously reflective of a housing market bubble, and a lot of this is what actually contributed to the 2008 housing market crash. A lot of home flippers would actually typically buy a house and they would do what I like to call lipstick on a pig. They wouldn't do much to the house. They would do carpet, they'd do paint, they would do fixtures, things like that, and they would turn around and immediately put it back on the market. And obviously you're trending in an upward direction with the market, and therefore that actually caused housing prices to go up extremely rapidly. Now, flips actually comprised 11.4% of home sales back in 2006. According to Adam Data Solutions, in the third quarter of 2020, about 5.1% of all home sales were bought for quick resale. Now, that's actually down from 6.7% of home sales in the second quarter of 2020. And it's also lower than the post-recession high of 7.2% in the first quarter of 2019. Now, the decline of flipping is due to the reduced inventory of the overall housing market. However, Adam's Data Solutions actually report that the pandemic's effect on flipping is contradictory and difficult to forecast. But I definitely know that to be true because I actually have seen a lot of flippers get out of the industry due to the fact that there was just no supply, and at the end of the day, if there's nothing to buy and you can't buy it at the right price, then there's really no profit to be made. And I know a lot of flippers that got squeezed out of the market over the last couple of years with all of the surging house prices, which again indicates that we are in fact in a housing bubble. Concerns are definitely growing over the state of the US economy, and it's definitely taking a toll on Wall Street, okay? Now that's continuing to grow, and people are very fearful of a recession right now, and we're seeing that day in and day out. The stock market last week actually ended with the Dow Jones dropping another 350 points, and the S&P was down roughly 70 points. The tech-heavy NASDAQ dropped more than 300 points. So the question really is, where is the investors' fear kind of coming from? And the answer to that question is fairly simple. Obviously, we want to look at interest rates, and the recent hike of the interest rates is a massive cause for worry. By the end of 2022, a lot of experts actually say that the 30-year fixed-rate mortgage could land somewhere between 5 and 7%. And there are people out there that actually believe and anticipate that it could go even higher than that by the end of 2022. There's also a really tight labor market right now, and even though employers added about 390,000 jobs in May, basically unemployment has remained unaffected and is still at about 3.6%. So the data released on Friday basically comes from the current administration and the Federal Reserve doing whatever they can to slow down inflation, even if it means slowing down the overall economy. Another thing that we have to look at is that home sales are currently falling, okay? Fortune actually reports that they're not only falling, but they're falling sharply, that housing demand is coming down fast, home price growth will go flat here pretty quickly, and we will see price declines in a significant number of markets. Now, I know for a fact that I can attest to this. I'm an agent and I'm an investor in the state of Arizona, and we have a thing that is called the Cromford Report. Now, the Cromford Report, the demand has actually dropped significantly in a matter of a couple of short months. Inventory has almost tripled in a matter of less than 90 days, and we're seeing days on market go up, and really everything of this sort. And the thing to remember is that Arizona is an extremely hot market that people are wanting to move to. The demand in Arizona, theoretically, is a lot higher than what you might see in a lot of other markets throughout the country. The Economist, who is a contributor to the Washington Post, actually used the term housing correction, okay, to mean that the housing boom would basically end and give way to a period where home prices will fall in some regional markets. He went on to predict that year-over-year home price growth would flatline over the coming 12 months, which would mark the worst period for this sector since 2012. When the housing market starts to shift, one thing is for certain: it's extremely difficult for buyers and sellers to see eye to eye when it comes to pricing, because the seller still thinks that it is a red-hot housing market, therefore they still want to list at the very top of the market. However, the buyer many times realizes in the moment that the market is shifting and they're starting to want a better deal on said property. Now, getting them to see eye to eye when you're in the middle of a market shift is a little bit difficult at times. The question really is now a good time to buy? Is it a good time to sell? Like, what should you actually do in the market? You know, and I'm right there with you. I'm a homeowner myself. I'm actually doing an addition to my property. I made another video on that, and I'm kind of in the middle of doing like a value add to the property that I'm currently living in right now, which I actually bought as a rental property, but now I'm like, well, maybe I should just stay living there until we kind of actually see what happens in the market. What I know for sure is in the state of Arizona, but we're seeing it, you know, kind of nationwide. I want to say, you know, since the beginning of like 2020, right, to 2022, you know, we've seen a massive increase, like 30+% nationwide in terms of appreciation, right? I know that in Arizona, in like January of 2021 to October of 2021, we saw like a 27% increase or appreciation just in Phoenix metropolitan. Now, that's not healthy, okay? When interest rates were at an all-time low, you know, below 3%, and when we had an appreciation of, you know, 30% in 1 year, that in no way, shape, or form is a healthy market. So I think a lot of people are a bit confused. You know, we've been in the market that we have for quite a while, and we see all sorts of different things going on. You know, we got used to a house selling in an hour, right? We got used to, you know, having 50 offers on a home. I literally remember seeing lines of people to go view a home. And, you know, that is in no way, shape, or form a healthy market. You know, buyers were getting priced out of the market, you know, especially first-time home buyers are getting priced out of the market. Big national hedge funds were buying into the market. You know, I saw hedge funds that were buying 500 properties a week in any given market. I'm talking one single individual market like Phoenix metropolitan, for example, or Las Vegas, Nevada, Atlanta, Georgia, wherever. And that is just ridiculous. So obviously we're heading towards a slower market. You know, we've seen the stock market do what we talked about it doing right now. And we've kind of seen everything, you know, that we're seeing. And so the market's definitely slowing. What I would say right now, depending on your market, will depend on what you're seeing in particular, right? So I know that in Arizona, you know, it's still a seller's market technically, right? As of right now, okay? We are plateauing, right? Demand is definitely going down. Supply is definitely going up, right? Days on market are definitely getting longer. We don't have nearly as much offers, and not every house is even selling, right? The actual success rate of the home selling is definitely dropping, according to even the Cromford report, okay? But again, that'll vary market by market. In the market you're in, you might already see a price, like actual decline in home values, okay? It will depend on the market that you're in. And again, we will just have to play it by ear. If the Fed continues to hike the rates, then theoretically demand will have to continue to go down, supply will have to continue to go up, and we're going to continue to see the pattern that we're currently seeing. Now, you know, are we going to end up where we were in 08? Again, the reasoning is totally different. There are a lot of different variables, and I'm happy to talk about it in a future video. So if you haven't already, smash the like button for the YouTube algorithm, subscribe if you have not already, comment down below what you think is going to happen in 2022 as it pertains to the housing market and the housing market crash, housing market bubble of 2022. And I'll look forward to seeing you in the next video.